FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to the Financial Survival Network. I'm Kerry Lutz. It's 10/18/18. Put that in your numerological hat and smoke it. Hey, as always, we love getting your emails. Just email us, kl@kerrylutz.com. Well, a lot of market turmoil last week. Looks like it's settled down like it never even happened, which certainly is not a big surprise to us here. We see this thing going on for quite a while longer, at least until it stops. But someone who is actually able to cash in on the volatility of last week is our good friend Rick Ackerman. You find his work at rickackerman.com. His daily free newsletter, very insightful as to market direction. I read it every morning, is Rick's Picks. But don't go and Google Rick's Picks because you'll wind up with pickles, not stock picks. Anyway, Rick, welcome back.
Thanks for inviting me on, Kerry. Always a pleasure.
So we had tremendous volatility, huge swings in a matter of days. And, if I understand it right, your system, the hidden pivot system, you can make money all along. But when you have those gigundo moves like we had last week, that's really when you clean up, isn't it?
Well, we had some good success with that, Kerry. One of the vehicles that my subscribers play very selectively is VXX, which tracks volatility short-term for the S&Ps. And if you just wait for the opportunities, they're pretty good. We were buying vertical call spreads in there about 3 or 4 days before volatility took off, and we got them for prices between 50 cents and 21 cents, and they went very easily to the max, which was $5. So that was a 25 to 1 hit. Is a very good play, and it was easy, no sweat.
Hey, so volatility, the VIX, that's the volatility index, and you're buying options on the volatility index, and you're buying them for 21 cents a piece, which is the equivalent of $21 per contract?
That's right. We did vertical spreads. The maximum risk was the $21 we paid going in, and any volatility explosion was going to send them as high as $500 a piece, $21 to $500. So that's a pretty nice risk-reward relationship. And anyway, it worked out really well. I put that spread out on Facebook, by the way. If you go to the Rick's Picks Facebook page, and not the pickle and relish vendor, but Rick's Picks, the stock market guy, I put out explicit instructions for that spread at Facebook.
Hey, that's pretty wild. And so you call it a vertical spread. Could you just elaborate on that a little bit?
Well, in this case, the VXX was trading around 26, and I bought the 30-35 spread, which was out of the money. The spread only becomes worth money if VXX pushes above 30, but it pushed to 38, so the spread was so deep in the money that it was easy to sell for the maximum value of 5. And we've got a spread on right now, too, in the diamonds. What
are the diamonds exactly? That's a Dow component?
Diamond's just a cheap, easy way to bet on the Dow. Right. And we bought another vertical spread, this time a put spread, where we bought 245 strike puts, and we sold 242.5. So our maximum gain is $250 per spread, but we were in there doing it for $34 per share. So we got about 6 or 7 to 1 odds on that. And, of course, the odds are never going to be with you in a 9-year bull market that it's going to fall apart, that we're somehow catching the mother of all tops. But if you can get 6 or 7 to 1 odds on the possibility of the market falling out of bed in a given week, these put spreads work out pretty nicely.
That's interesting. So one of the things of the hidden pivot system that you do is you're looking for high potential trades where you can really make a big score. What's the reason that you're looking for them? Because they don't come along all that often, do they?
every day. It's not always easy to find them, and I would say a lot of the time you have to go against your gut feeling. You know, I was in there playing Apple calls today, and you have to come at it with a scenario in your mind. So I thought they were going to open them weak and take them up today, but they didn't. They started up a little bit and actually started down. And except for small rallies, nothing went very far, especially the FANG stocks. And it kind of surprised me the way things came down as hard as they did today. But sometimes in the opening 30 to 60 minutes, you get some great bets with these options because the people who manipulate markets for a living tend to manipulate them against the direction they intend to take stocks in a particular day. So they're looking for fire sale prices on the opening, and then they're going to show some cards.
So you're telling me there's manipulation in the market, Rick? You mean there's gambling, Rick? Come on.
I would say, Kerry, that if you were to express that as a percentage, I would say that 103% of everything that goes on in every market is a hoax. It's like a carnival midway, except we're working with bigger numbers.
Fascinating. And here I thought we had honest and well-regulated markets where the average guy had a chance to earn a profit, and now you're busting my bubble here.
Well, they are regulated markets, but as you know, the purpose of regulations is to allow the monopolists who control those markets to completely control them. So however they're regulated, the rules are such that the big guys, they make their own rules.
That they do. And look, so what we're looking at here, opportunities pop up. You have to be there to capitalize upon them. Your system, so you're going to identify these phenomenal trades that can really earn you many times your initial investment. And then how much are you risking when you find these? Because it sounds like these would be the most risky of trades.
Well, even when I worked, I was 12 years a market maker on the Pacific Exchange. And even then I had kind of a predilection for cheapy options. Anything over $2, $200 per option scared me. So when I do these leverage plays, I like them down in, you sometimes, the option that I was buying today on the opening in Apple, I put in a 25-cent bid, and it turned out to be pretty rich. I could have put in an 11-cent bid probably and gotten filled. 11 cents meaning $11. Mm-hmm. And so I look for the real cheapies, under 50 cents, meaning under $50 per contract.
Yeah. So under $50. And how often do you hit pay dirt on these?
If you're even hitting 1 out of 6 or 7, you're ahead of the game, because when you do hit, sometimes the gains are enormous. With some of these stocks, I think Netflix today, you could have taken a shot there that would have made you forget about 10 to 1. We're up in the 20 to 30 to 1 threshold. So you really don't have to be successful that often to come out pretty good.
Yeah, I see. So, and then of course you got to. How big a window do you have to take this profit? I mean, how closely you need to be watching this trade?
Oh, the window would be anywhere from around 90 seconds to 3 hours.
Uh-huh. So you got to be up on this. So you really need to be up on what you're doing. You can't just set it and forget it, right?
That's true. You really have to watch, and sometimes you light a few fuses with these trades, and you hit them, and you wind up. It's pretty busy because just watching maybe 2 or 3 stocks where you've been filled on options. It's a full-time job.
Yeah, full-time job. So, but you don't have to make it a full-time job, right? I mean, you don't have to be the most serious option trader that you ever wanted to be, unless that's what you decide you want to do.
No, I think there was a book out called the How Many Hour Work Week?
Yeah,
But,
3-hour work week, right.
It was, with certain option strategies, if you work maybe 90 minutes every Friday, you'll do just fine.
Yeah. So what day of the week are the best opportunities generally?
I love Fridays because they're so crazy, but, any day is potentially a reversal day, and that's when these strategies can really pay off.
So it could be any day. And one thing you were telling me, the types of options that you actually play here, it's a little bit different than what others do, isn't it?
Yes.
Yeah. Which ones do you play?
Well, I like the lunatic stocks, AKA the FANGs, Facebook, Amazon, Apple, Netflix, Google. But there's some others that work, Boeing, Nike. It's really, you can trade stocks that are in your price range. And if you're in Amazon, for instance, up in the $1,800 range, there are some swings in that stock that can kill you. It's not, you need a very sizable trading account to hold just 100 shares of Amazon. Mm-hmm. But there are ways, believe it or not, of using my system to trade an $1,800 stock with entry risking no more than about $11 or $12 per share. I call those mechanical trades, and the nuts and bolts of it are that you find promising trades on bigger charts like the hourly chart or the daily chart, but you actually execute the trades based on patterns that are there in the 1 minute chart or even less. So your risk is commensurate with the time frame of the chart. If you're looking at a bar chart where each new bar gets put up every 8 seconds, you're dealing with very tiny patterns that have commensurately small risk. And the idea is that you only look for these little patterns to get into a trade when they're signaled on charts of larger degree. And what you wind up doing is getting a little shuttle ride, but you wind up hitching a ride on the mother ship. You're looking in these cases for very big moves that would complete very large patterns that play out over weeks or even months. But you take when you get an entry signal on one of those big patterns, you zoom down in on the 5 or 3 minute chart, and you find your entry price that were there. And if you're right, you're going to get kind of a double or triple or quadruple entry trigger effect, where it hits the price and it takes off like a rocket. And of course, the method that I'm using is one of the only ones I know of that knows the reason why stocks occasionally go bananas. They, in many instances, they are hitting a double, triple, or even quadruple entry prices that are signaled on different charts of varying time frames.
Interesting. And then when you dispose of these options, you don't just sell them all at once, do you?
Oh, no. The absolute best way, and this applies not just to options, but the best way I know of to trade well is to take a small profit early on. So, we've all been in that boat where we get into a trade and it goes against us and we get a little nervous and it goes against us a little more and we get kind of rattled. And then when we finally decide to bail out, if we had a crystal ball to get us out of that trade at the worst possible time, we couldn't have done worse. So when you trade on instincts and you're scared, you always do the wrong thing. And I found the best way to do the right thing is to put your brain in that comfort zone, to be a little bit relaxed. And the absolute easiest, best way to get relaxed is to take a little of the house's money off the table early on in a trade. So with these options trades in particular, I always advise taking half the position off when it doubles in price. And as I mentioned, sometimes, on the right kind of trade, on the right day, you can do that in 90 seconds. So you're out of half of the trade, and that means that the remaining half is free. It's risk-free. And you'll be absolutely astounded when you get in that position where you have nothing to lose, how much it enhances your timing and your ability to manage the risk of the trade.
Yeah. So the first thing is protect your principal. Take a profit that enables you to basically have staying power. Because once you've got a free trade, then you're less likely to be emotional, aren't you? Because you're not going to lose money, so you're not going to have the fear of losing money.
Absolutely. You know, if you're in a trade and you take a little bit of profit here and then a little bit more there, you never have that problem of where do I get out? You know, you're going to be out at some point of 75, 80% of your position with a little bit of it left, and you'll be really cool about, well, I'll just get out when I want. And you also have the ability to swing for the fences then, because no matter what happens, you're not going to wind up losing money. So it's to put your mind right for trading. You should always take a small profit early on if it's available.
Interesting. So, and then how many times do you keep that small position for the very end, where you're hoping swing for the fences, if you will, that it actually turns out to pay off?
Well, it's in the nature of trading that the best trades are going to scare the hell out of you. You know, a good trade, when you get into a good trade, your gut is always going to be telling you not here. Because, you know, the comfortable trade, let's say you've got a good rally going and you think, well, heck, what's the problem making money here? You just get long, go with the flow. But the fact is, if you're looking at a nice rally, everybody else is too. And the more people who get in on the same side of the trade, the more diabolically evasive that trade becomes as far as the objective of making money. So, you know, so you really, you need to trade. A good trader is always out of his comfort zone when he enters a trade. It's always going to look like, geez, I don't know about getting in here. So that's the whole point of it. And if I get an options trade that's going great, and I think I'll take profits here, it's amazing how often at the instinctual level you're wrong about it, you know. So again, I use another mechanical rule, and that is whatever options position you put on, you know, the beginning of the week or whatever, and an option's got 3 or 4 days to expire, hold at least 1 or 2 of those contracts until just before the bell rings and those options do expire, because crazy things happen. And remember, you're in the trade, you have nothing to lose. You've already taken some profits out. You'd be surprised at how easy it is to handle the nutty things that happen in the last hour of an expiration day. You have nothing to fear, and you'd be surprised also at how that last hour can totally bamboozle you if you think you're smart and logical.
Interesting. Hey, so you do a Facebook Live presentation every Friday, don't you?
That's right. And I try to put out a trade that's actionable, something you can do, and I try to make it as simple as I can, because I know that most people who are trading options have not made money at it. A lot of traders, you know, they think, well, I'd like to take a crack at it. 98% of those who have taken a crack at it have not made money. So it's a very difficult thing to line up your ducks so that you've got an options trade that is good enough to make money for hundreds of people who may be following you. So that's what I look for. I look for those trades that can't miss. And of course, that's the holy grail. You're always going to miss now and then, but if you're shooting for 4-to-1 or better profit on your initial bet, then you don't have to win all the time.
All right. So where do we find you on Facebook, by the way?
Well, if you go to, let's see, it's just Rick's Picks, and be careful you're not on the Pickle and Relish Vendor site. You'll know the difference, though, but it's Facebook. I'm just Rick Ackerman, and I've got a few Facebook pages there. One of them happens to be my Rick's Picks page. Right. So just look for Rick's Picks on Facebook, and it'll take you there. There are a bunch of recordings that I put out. You can review some of them to see whether my instructions were simple enough for you to have followed. And the one that involved that vertical spread in the volatility index, VXX, that was out there under the headline, How to Leverage an October Disaster with Cheap Calls. So that's what we did, and we got the move a little bit earlier in October than I had expected, but we were there waiting for it.
All right. Hey, so go for Facebook. It's Rick's Picks, and you'll see Rick's good-looking photo there. And then, hey, you can go to your site, rickackerman.com. What's your special that you're offering now for new members?
Up at the top of the page, rickackerman.com, there's a green button you can press. It says get a free trial. And you take that trial, it will give you 2 free weeks with all of the services that I offer. They include the daily touts that I put out each day. These are frequently actionable trading recommendations, and some of them are geared for experts, and some of them are geared for everybody, beginners, anybody could do them. You'll also have access to a chat room that draws some really great traders from around the world, around the clock. And one of the unique things about this trading room is that so many of the people in it have taken my Hidden Pivot course, so they're all literally on the same page as far as the technical methods that they use to forecast and trade. So, even if you've been in a room where there are a lot of Elliott wave experts, you'll see that there's plenty of room for disagreement there, and it can be kind of confusing. But my Hidden Pivot system is relatively simple. Anyone can learn it, and I'm an English major, and I developed it so that even my English major brain could make it work. And so the chat room is really, it's a great place because there's so many people who are real experts in using this system. And even more helpfully, the spirit in the chat room is one of courtesy and civility, and if you ask questions in there, they always get answered. So you've never been in a chat room as helpful and friendly as the Rick's Picks room. Yeah. And I also do occasional what I call impromptu request sessions, where I just kind of open an online meeting room, and anybody is invited to come and ask me what I think of this stock or that. Mm-hmm. And I do an on-the-spot technical analysis of whatever stocks, ETFs, commodities, options, whatever interests my subscribers. Hey, well, so those things are all included in the free 2-week trial.
Sounds great. And so it's rickackerman.com, rickackerman.com, or just click the link in the show notes to this interview. Or go over to Facebook and just search Rick's Picks, and you've got dozens of videos that you've done there, Rick. Highly recommended. And look, easy, relatively low risk system for making money in options, which most people lose money in options, let's face it. So it'll give you a head start, teach you a new way of looking at the markets. Go take a look at it, get the trial, it's free. And then from there, you go on. And, hey, if you really like the video, webinars are available, etc. Rick, it's always great having you on. And as I said, anybody with any questions or comments, just email us, kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page, Financial Survival Network. Rick, we'll talk to you again real soon.
Thanks much, Kerry. It was very enjoyable.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.